Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss whether 10-year US yield is going to move higher. If yes, what impact it is going to have on dollar index and other currencies. And finally, we will discuss outlook on dollar rupee pair and strategy for exporter and importers. There are two factors which can impact the yield to move higher. The first one is tariff, and the second one is one big beautiful bill of Mr. Trump. Trump tariff deadline is expiring on 9 July. Earlier, Trump administration was expecting that on 90 days they are going to sign 90 countries deal, but only two deals were signed. One is Vietnam and another is UK. Now this raises two questions. First question is whether the Trump is going to extend the deadline or he is going to put a reciprocal tariff. One probability is that he is going to put 10% simple tariff till the time negotiation has not been completed with those countries with whom he is expecting a positive talk. We can say that India can also be in that list. With those countries with whom positive talks are not happening, in order to threaten them, he may put some additional tariff which is more than 10%. Now the question is whether he is going to put tariff or not going to put some tariff. How does it going to impact US economy and what is going to happen to 10-year yield? Basically the answer is that if the tariff is more than 10% with any countries with whom he has lot of import, that is going to make things costlier in US economy, and if that happens then it will postpone or it can reduce the probability of Fed decreasing the interest rate in coming days. If that happens then 10-year treasury yield is going to move higher. Now let us understand what is the impact of one big beautiful bill of Trump on 10-year yield. It is said that because of this bill, the fiscal deficit of US is going to increase by 3.3 trillion over next 10 years. Few important point about the bill is that it is going to decrease the tax by 4.5 trillion dollars, and it is going to cut the expenditure close to 1.2 trillion. The cutting of expenditure is going to happen from 2026. In net to net समरी क्या है? Summary ये है fiscal deficit is going to increase. Now if fiscal deficit is going to increase, it is going to put pressure on US yields. Now whatever fundamental factors we have discussed, similar kind of story we are able to read in charts. 30-year US Treasury yield chart is giving us an indication that it is ready to move towards higher level. Currently it is trading near 4.86 kind of levels. 4.75 to 4.70 is going to act as a strong support. Once it breaks 4.90 kind of a level, it is going to move higher towards 5.15 to 5.20 kind of levels. Now what is the conclusion? Inflation and fiscal deficit both are going to rise in US, because of which yield is going to shoot up. If that happens, probably in the short term dollar index can take support near 95 to 96 kind of a level, and it can move towards 100 levels. Euro USD, which closed on 1.1779 kind of a level, will face a strong resistance near 1.18 kind of level. It is expected that in near term it can move towards 1.16 and 1.14 kind of levels. GBP USD, which closed at 1.3653 level on Friday, it is going to face a strong resistance near 1.38 kind of a level, and there is high probability that it can move towards 1.34 and 1.32 kind of levels in coming days. So clients having export exposure on euro and pound should ideally increase their hedge ratio. To what extent they should increase their hedge ratio? For that they can connect with my team. Now let us discuss the outlook on rupee. On 2nd April 2025, Liberation Day of USA, at that point of time dollar rupee pair was trading near 85 and a half kind of a level, and dollar index was trading near 103.80 kind of a level. From there, dollar index has drastically fallen down to 96 kind of level, but rupee is trading at the same level. Ideally, when dollar gets weaker, rupee should also appreciate. This data tells us a story that on lower levels there is a demand, probably from RBI and importers. So if dollar index moves higher towards 90 and a half kind of a level or 100 kind of a level, it is going to put pressure on rupee. We are expecting that 85.20 to 85.40 is going to act as a strong support for the pair, and there is higher probability, say 80 to 85% probability, that the pair can move towards 86 to 86.20 levels. So basically, exporters can keep a stop loss of 85.20 to 85.25 kind of levels and can wait for higher levels of 86 to 86.20. And importers can cover their next 45 to 50 days import between 85.40 to 85.50 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.